Good morning, and welcome to today's webcast, Tax Saving Opportunities and Compliance Tips for Texans. Before we begin, I'm going to play a brief housekeeping video.
Welcome and thanks for joining us. Our webcasts are designed to help elevate your business performance. Transform your future for the better with advisory solutions tailored to your vision and supported by our collective technical resources. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget. You can ask our presenter questions during the webcast by typing a question in the Q&A window and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% or 3 of the 4 polling questions, which we'll ask throughout today's presentation. Polling questions will appear within the slide window. To participate in the polls, please click on your answer and be sure to hit the Submit button to record your response. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget and download your CPE certificate. Don't worry, if you can't download your CPE certificate today, we'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our group CPE attendance sheet to receive credit. The attendance sheet is available in our slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit only can be awarded to participants registered as themselves, and isn't available for participants who view the on-demand version. As a reminder, the presentation you're about to see is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
Before we get started, I wanted to share our big news that Moss Adams and Baker Tilly have joined forces to redefine accounting, tax, and advisory services for the middle market. It's really exciting, and you can read more about it on our website via the link in the slide deck and handouts widget. I'm pleased to introduce today's presenters, Gina Kucera, Director, and Kristen Scherer, Director. With that, I will turn it over to Gina to get us started.
Do a mute, unmute, Gina.
Can you guys hear me now?
Yes. It's been the struggle all morning, but you're good to go.
All right. Thank you for joining our webcast. Today, I'm going to be providing an overview of the Texas Enterprise Zone program, along with updates and strategies. So the program is a state program, and it is for state sales and use tax refunds. And companies that receive a designation are based on planned capital investment and job creation and or retention at a qualified business site. Now, fun fact, our companies do not need to be located within an enterprise zone to qualify for this program. So your facility can be located anywhere in Texas, and you could participate in this program and receive benefit. The program is a competitive program, and you will partner with your local jurisdiction who will assist with the nomination of your project. And the applications are submitted quarterly on the 1st of both March, June, September, and December. The applications are scored, and they are calculated based on 3 factors. and that is the distress level of your city and county, local effort, and private effort. Once you are in the program, a company can receive a refund of $2,500 per qualifying employee for a maximum benefit of $1.25 million in refunds, or basically 500 jobs. So one designation is capped at 500 jobs. If you have a larger facility that has, say, 1,200 jobs at its location, the governor's office does allow a company to submit a second application for a concurrent designation, as long as you have additional capital investment and, again, enough jobs to qualify for a second designation. As part of the program, you are required to retain the jobs and make the investment over that 5-year designation period. So we are going to move to our first polling question, and that is, what type of tax refunds are available through the Texas Enterprise Zone program? A, property tax, B, sales and use tax, C, income franchise, or D, all of the above. And so we'll give you some time here to answer the question. Again, there are 4 questions, 3 of them to receive your CPE credit. I see we're at 43%, slowly moving up. All right, I'm going to close it out here in a few seconds. So for those of you who've not answered, if you want to. Okay, we're at 80%, so I will move forward. And it looks like maybe I should have emphasized it more, I'll be honest. So it's the sales and use tax. That is what this program, those are the refunds you will receive. I see people put all of the above, and then some put property, but this is a refund of the state sales and use tax. So we will move forward with the updates. September 1st started a new biennium in Texas. And as part of that, the governor's office renewed the number of designations for this program. So there are 105 designations that are allowed during the biennium, and those are broken up per round. So approximately 13 applications can be approved per round. And the governor's office recently went to an online electronic filing portal in May 2025. And this portal has made the process much easier. So the application can now be completed and submitted through the portal, and that eliminates the need to have it mailed or hand delivered. Again, for those of you who are not familiar with the program, prior to the portal, the application, it was a binder and it had to be in the governor's office on the date of the deadline of the round. And it either had to be mailed or hand delivered to ensure that the governor's office received it. As part of the process, the portal now allows you to track it in real time, and it prompts you. So if you have not completed a section that is required, you're able to track that. And if you're working with either a consultant or internally with another team member, you're able to see what is required and what attachments need to be uploaded and signatures need to be included for submission. Additionally, this allows you to see the local jurisdiction if they have been assigned your application and if they are able to upload their signatures that are required for the application. This tracking mechanism is, I think, is a valuable tool, mainly because when you submitted an application in the past and it was a hard copy, if you forgot to insert something or if you didn't have an original signature, the governor's office only allows a certain number of deficient items in an application during their review. And if you were over that, they would withdraw your application and you would be forced to resubmit the following round. So by having the built-in prompts, it really eliminates any error of not getting those documents included the first time around. Next, original signatures are no longer required. Both the jurisdictions as well as the companies, and if you're using a consultant, all of these pages can now be signed and electronically uploaded. Again, going back to the hard copy, they originally required all documents to have a wet signature and to be submitted with the application. And that meant some management of time, if you will, because you had to get those documents out and then they had to be sent, mailed back to you. So you had those hard copies to submit along with the application. Last is the monitoring process. This, again, you are able to track the submission of your application now. So you can see once it's been submitted, if it's in review, if it has been approved and denied. So it really reduces it eliminates basically you having to follow up with a phone call or emails. So next we'll move to some program updates, or continue with the updates, I should say. Part of the changes in the program in the recent years have been to the compliance portion of the program. So once a company is approved for a designation, they are required to complete a job certification and a refund claim for 5 years. And in 2020, during COVID, many companies were forced to move their workers remotely. And that basically eliminated them. I don't want to say eliminated them, but they were no longer meeting the qualifications of the program of the current rules, because the rules are you need to have the person performing a job at least 50% at the site, or you could have that person who is involved in transportation. They can be assigned the site, but they need to live within 50 miles of your qualifying site. But again, when COVID happened, many companies moved their employees remotely, and those that received designations they fell into two buckets. One, they were either not able to qualify employees, so they didn't receive any benefits and they had to withdraw their designation. Or the second bucket was they were in the middle of a designation. They had already received benefit, but they weren't able to maintain that qualification. So they were put in a payback position and they were forced to have to pay back the refunds. To modify or to help companies alleviate that, in June 2023, Texas did pass and enacted legislation that now allows for a third bucket, and that essentially is for remote workers. So a company can now have remote workers as long as they live within 25 miles of your qualifying facility. How that expanded definition impacted what you need to provide to the comptroller's office, it has you pulling additional information. So now you need to identify whether that person is remote, on-site, or transportation. You also need to show what site they report to, and you need to provide a map outlining the distance of any remote employee. So there are additional steps now of what the comptroller is going to look to and what you will need to support to qualify your new jobs. We'll move to our second polling question, and that is, when was the Texas Enterprise Zone online portal implemented? Is that A, September 2024, June 2023, May 2025, or D, none of the above? Again, we'll give everybody a few minutes to respond and answer the question. We're at 51%, so we'll give, again, everybody a little more time here. All right, I'm going to close out the question. So again, it looks like 38% got it right. It's May 2025. So the portal has been live for 2 rounds now, and the governor's office is still working out logistically some of the kinks, but a great time saver. Now we'll move forward to some of the strategies. First, I want to emphasize the importance of understanding the qualifications for the employees. Also understand the remote working provisions. So, and I say that because when you enter into the program and you complete your job certification, you want to understand if your systems have the capability to track remote workers versus on-site and transportation. Additionally, are you going to be able to map those people to show them the distance? Next, understand the difference between new employees and retained employees. Both of those buckets have different reporting requirements and different supporting documentation that will go along with that once it's submitted to the comptroller's office. The last item I really want to emphasize is if you're considering the program, I would connect with your HR department. And I say that because to receive the benefit, you have to provide payroll information that is specific to each individual at that facility. And your company may have a policy that they don't want that information going out. They're not going to release that information. So you don't want to get down the path of putting time in and submitting an application if you're not going to be able to meet the compliance requirements. Next, the online portal. I know we spoke about it earlier, but you want to register on that portal. You want to understand the system and its functionality. If any of your team members are going to be working with you, you want to make sure they are able to register into the system. Also, this system is going to allow you to track the progress both internally and externally. Again, you're able to see what the local jurisdiction has uploaded. Have they sent over the nominating ordinance or resolution? And it will allow you to communicate with them to say, we don't see it yet. So you want to use this tool and utilize all of the items that are available to you within the system. Next, you want to look to the biennium. It just started, so again, there's 105 designations available. The first application round was September 1st, so they're currently reviewing those applications. But you also want to work with your jurisdiction, because your jurisdiction you're located in, depending upon that population, they are only able to have 6 or 9 designations per biennium. So you're going to want to reach out to them to see what they have available and the timing of getting you a nomination. Next, the incentive potential. I encourage everybody to look at their capital investment. You want to understand, what a qualifying investment is, and if you're making that investment within a 5-year period. If you start to look at your investment and you realize a project may have started, the program does allow you to look back 90 days and recapture some of that investment. But again, you want to plan accordingly. And you also want to consider the capital investment a separate item of the refunds that you may be claiming. In some instances, it can be the same, but you can also seek refunds on your utility bill, anything you pay sales and use tax on at that facility can be included in your refund claim, not only the items that you listed in your application for capital investment. Next, as it relates to your sales and use tax refund claim, you want to make sure you're looking at those invoices, because your invoice that you submit for your refund claim, they have to have the appropriate company name as well as the qualifying facility address. If you don't have those items on your invoices, they will not be accepted by the comptroller and they will not be approved for a refund. Next, you want to partner with your local jurisdictions. Many of you probably already have a good working relationship with local city and county officials, but approaching them regarding a nomination and support for your project, it can be used to strengthen your relationship. And if you don't have one, it can be used to build a new relationship. It also gives you the chance to highlight anything you've done for the community. If you've sponsored an event, if you contribute to a nonprofit organization, if you are creating a large number of jobs and helping to strengthen the economy in that area, these are things you're going to want to discuss with the local officials. And last, I would want to stress upon is the compliance and what it looks like. If you're entering into the program, you're going to want to make sure you have systems available to you to pull this information. So again, do you have access to the payroll system, or is your HR going to provide you with the report? And does it have all of the information needed to certify your jobs? Do you have a fixed asset system where you can pull additions for the year so you're able to track that investment? And if these items are not something that are readily available now, are there ad hoc reports that you can build that will help when you need to certify the jobs and submit for the refund claims? Additionally, you want to confirm you have the bandwidth to prepare these items. Again, the job listing, the refund claim, a lot goes into those. A lot of tracking, a lot of pulling that documentation together. You have to look to the easy residents to make sure you have those maps, whether or not there are distances, payroll reports, etc. I mean, there are tons of items that go into this. And so that's why oftentimes companies will use consultants to help streamline that process. Additionally, once these items get submitted to the comptroller, they're always audited. So that is going to take some additional time. And again, companies hire the consultants to do that because they'll usually work through the audit and ensure you get your refund claim. Now I'll turn it over to Kristen and she can talk about the Texas tax legislation. Update.
Join some type of a webinar or read an article where you could hear what all happened in the last session. Like normal, you know, thousands of bills at the beginning of the session. Over the summer, heard a lot about bills in response to the July 4th floods, THC bans, putting the 10 commandments in the schools and the cell phones out of the schools, etc. But today we're just going to talk about some of the tax bills that came out of the legislation, as well as some agency releases, memos, letter rulings, and just kind of some trends that we're seeing. So even if something we speak on might sound specific to, let me try to turn this up. Am I better now? Let me try. Mute and unmute. Is that any better? I can quickly grab another microphone to try. Sorry, everyone. Try to just speak as loud as I can. Is this any better if I get closer and speak better, Gina? Or is it still, is that okay? Okay. We had a little bit of issue with this, so sorry about that. So again, we're gonna focus on some of the tax items that came out of the legislative session. So first item we have here is with regards to the administrative just some of the efficiency changes are going to be very beneficial to taxpayer. As working through the legal side of things, they're not going to necessarily have to rely on the comptroller's or the agency's interpretations, their regulations and rules. If it makes sense, they can, but it's not going to be required that we rely on that. So that's going to be, a good fact pattern whenever we have poorly written regulations or quickly written regulations. The next item here, just around writing those regulations and rules, just having them a lot more, using plain language, very concise rules that get to the point. They're organized in a manner that makes sense, and also requesting public feedback. So just giving, large taxpayers or any taxpayers really an opportunity and a voice to provide feedback on maybe how the changes could unintentionally, impact or affect their business. Really just a continuation here of efficiency. This is the Texas Doge, if you will. So just looking for ways that we can, eliminate duplications, rules that just aren't reasonable for taxpayers to try to implement, eliminate unnecessary requirements. Some of the things Gina spoke on, like the portal, the similar items. So, and just a lot of visibility and transparency in the steps of rulemaking, including kind of the economic impact. So, you can usually go out to the websites and see those bills in motion and what the impact's going to be and where they're at in the process. And that's updated in a lot more real time. Just a few deadlines. A lot of these were just in the month of September here, so a lot of this is going live now. So just being mindful of that timing. The time is now, if you will. Just a few tweaks, with respect to the jurisdictional or the judicial proceedings here, the penalty, the timing, etc. So these were kind of the priority items. We did end up passing something around property tax. We'll talk about some things with respect to water. School choice was a big topic for a lot of people. And we'll talk through some of the franchise tax and sales tax bills that were passed in the session. It's just kind of a continuation here. So, all right. So, as I mentioned, lots of bills filed, not all of them pass. Timing here today, we won't go through the 3,399 maybe that didn't pass, but with respect to property tax, this is what landed. So increase of the homestead exemption, the rate compression, et cetera here. So always a personal interest for people that have this applying to them with respect to property tax. All right, so polling question 3, we do hope you'll stick around after, but who is the new acting comptroller of Texas? Glenn Hager, Kelly Hancock, James Shaw, or Christy Craddock? It was hard to pick which 4 people I listed on the multiple choice, but not seeing any response. Oh, there they come. They're flooding in now. All right, wait for a few more here. Okay, so currently, it was a tough one, but Kelly Hancock. Glenn Hager took another role with A&M, so currently it's Kelly Hancock. So it's breaking local news you got to pay attention to here. I think Kelly Hancock was in both the House and Senate, so he's been in there for 20 so years. All right, one of the biggest topics was the overhaul of the franchise tax. This has been kind of in motion over the last several sessions. So, the overhaul here is really it's gonna extend the credit But one of the big items is to eliminate that sales tax exemption. So previously it was the either or option. So a lot of companies pre-revenue would maybe take the sales tax exemption for purchases in lieu of taking it as a franchise tax credit. And that's going to be eliminated. So that's something to think about. We've got a few months left here to take advantage of that if that was the option you were going for. And then just a change on the timing. Gonna go through a few more things here. The biggest changes were really to align the Texas R&D rules with the IRS. So the way that it read, there was kind of a fixed date as it applied to the Internal Revenue Code. So now it's going to roll with it. So essentially, the IRS R&D credits in Texas will somewhat mirror each other. It's going to make that a lot easier for taxpayers to apply. It's going to make it a lot more easy for auditors to audit. So I think this is kind of a win-win. You know, the items that qualify are going to be lined up as well. It's going to a lot, you know, easier if you've undergone an R&D review for federal purposes. You can somewhat just leverage that and apply it for Texas. There's also a credit, an increase in the percentage of the credit. There is a look back period as well. There's a few nuances depending on if you're certain parties. And then there is a cap of the 50% of the tax due. There's also a carryback period that applies. Another item that Texas published was some guidance on the order of applying and tackling credits if you have various. So just a lot of guidance, I think, that's going to be out there. Go through a couple of these. Mention the carry forwards as well. So that's the 20 years and then the cap at the 50% of the tax. Might have went backwards there. I had a duplicate side. I think that was in the previous one. So we also mentioned the sales tax repeal. So R&D has been a hot topic. I think that, you know, there's audits in progress that will need to wrap up under the old rules, but I think it will be much easier for taxpayers to apply this going forward. These are just a few additional, just to kind of see who's out there industry-wise. So you see something specific to uniform and linens, radio broadcasters. You know, this is where you just see those kind of specific lobbyist groups, you know, advocating for certain taxpayers, and we see some things specific come out. Failures. You know, this is again just a few items. You know, sometimes they pop back in the next session. We may or may not see this. A lot of this is just around the reporting requirements. So, you know, with upcoming, just be sure, you know, what's required, what's not for which tax years. And that, you know, the Texas franchise tax years look a little different than calendar years. So just can avoid a lot of notices and headaches if we have the right forms and reports filed. I feel like there were, oh, okay, yeah, we still have more slides. We just moved this up a bit. So this is not at the end, but so far today, have you heard something that you want to look further into for your company? So either yes, I need to address how this is going to impact my business. No, the business is perfect just as it should be. And maybe I need to process everything I've heard and stick around for the rest to see if maybe I need to make some changes. Wait a little bit longer, get a few more in there. We'll go into some sales tax topics, which is fun and exciting. So Gina or me tell you anything so far that you want to look further into? All right, I'm going to go ahead and close that out. So a little mixed bag, but a lot of maybes. Well, stay tuned. So all of you knows you're about to hear something new. All right, so sales tax, just one item, Texas will list out the enumerated taxable services. So just removing internet access from that. Just seeing a lot of items out there for all the states in response to how Internet Tax Freedom Act applies and things along that line. So expect to probably see this as a continued trend. And kind of on that topic, some of the changes around data processing and what's included and what isn't. It's going to continue to be something that we see in response to the changes there. And also the local sourcing, that is just a hot topic in Texas. It seems like every few years we're flip-flopping between destination and origin and how that applies. So those are a few things, that I expect that we're going to continue to see trend-wise. So these are always fun to kind of understand and talk through. You might read through and think, well, that doesn't apply to my business, but I'll try to kind of emphasize the underlying application of a law that might apply to you, right? So the first one is just a flip in the agency and how they consider the taxability of sand, dirt, and gravel, and the equipment used to extract it. So this is really in response to the Westmoreland decision from a few years ago, where it was determined that processing can be performed on real property rather than just tangible property. So in Westmoreland, a lot of the excavators and this other, pricey equipment could qualify for the manufacturing exemption. So this was in response to that, where the comptroller is considering the taxability of the products then that are sold. So, basically you can't have both. So either you can get, the tax savings on maybe the excavators, the equipment, the dynamite, et cetera, on the front end as manufacturing. But then the items sold would be taxable unless some type of exemption or certificate would apply. Or you pay tax on the equipment, but the materials sold would be considered unprocessed materials, which are not taxed. So just going to be really scrutinized and audit in how they apply that. They're going to be looking at the timing, like pre this. It's going to look one way and post another way. And so they're going to be looking at both the purchase side and the sell side. So maybe it's removed on the sell side, but we might see some issues on the purchase side. So just kind of a nuance there. Again, a whole, you can't have your cake and eat it too. So that's kind of the crux of that one. The next one is, there are exemptions in Texas for recycling wastewater. So a company that does that type of processing. So they have equipment and chemicals and things that they use in that water recycling process. And occasionally they would dispose it down below the ground. And the state said, no, that equipment, it doesn't meet the definition that you're using it primarily to recycle the water. So because it was just done occasionally and that wasn't its specific purpose at all times, they were not allowed for the sales tax exemption with respect to some of that equipment. So to me, this always just goes back to Texas and being on the manufacturing side, it's like process by process and piece of equipment by piece of equipment along the way. It's not an all in. So just having good documentation and understanding of what each line and part and piece of equipment does, just to kind of prove out those items. The next one, even if you're not going around doing fracking, this one was really, it's just a bundled transaction issue. The subscription, I skipped down. Go back up to the subscription web-based one. This is a bundling issue. So the company has a menu of different services they provide, and you can get it all in one package for one price. If a part of that, if one of those items is taxable, beyond like a 5% is frequently applied, it taints the whole transaction and the whole thing is taxable. So this isn't a new topic. It's just another iteration that, the state is somewhat aggressive on this. But if it's not separately stated and it's not normally sold on its own, and it's substantial, if it's one price for a variety of services, that's going to be considered taxable if an item within there is. The next one is the fracking, the rental versus service. So we see this a lot in, energy, oil and gas, construction, et cetera. So is it truly, oftentimes things are listed as a rental, maybe on an invoice, but really it's a service. So, is there an operator or a person there that's running the item, or is the control and the operation truly turned over to the buyer? And so this was just an example of that, where, someone was controlling it with a remote. It applied some special skills, even though they weren't there physically all the time. The buyer or the taxpayer never had full control or custody or operation of these items. So it was determined that was a service, not a rental. The next one, again, maybe you're not in the business of insurance, but the issue here is this like a professional service that was being provided, or did this fall into like a data processing or an information service? So the company was doing pre-authorization services for healthcare, and it was whether or not it fell into a taxable insurance service. And it was determined that it did not, and that it was also not data processing or an information service. And the thing here is just that as technology evolves and our jobs evolve, your standard kind of professional services that maybe accountants or engineers or et cetera can provide, it gets a lot more blurry as technology comes into them, less human touch and kind of more systems. And so it just makes it harder to determine how to categorize some of those services when technology is just kind of moving faster than our tax laws and our regulations are written. A couple more here that I found interesting that I wanted to touch on. Again, we talked on the whole bundled transactions. We've talked rental versus service. We've talked professional services. The next one is a resale issue. So whether or not a taxpayer could issue a resale certificate. So they were purchasing hosting space and web storage for to be able to provide that for their customers. So they were taking the position that they were purchasing that for resale. It was determined that wasn't the sole purpose it was being acquired for. It wasn't solely being acquired to resell to a customer. It was being acquired to perform a service that they had contracted with their customer. And so, just kind of following closely that rule that you've got to essentially be reselling it in the manner it was essentially obtained. So it was just determined that resale did not apply. They were purchasing it for their own use and consumption in order to perform on a contract. So tax was going to apply there. And then I mentioned, I think this last one, which is that ordering of those franchise tax credits that we mentioned earlier on in the presentation. So. Cases we wanted to touch on before we wrap it up. So one is American Airlines. And essentially here, I'm going to go to the next slide, just kind of the positions. So the issue here, American Airlines is arguing that the Texas franchise tax, when it's applied to an airline related receipt, that it functions as a head tax that's prohibited under federal law. So they're saying that the state can impose these taxes on the airline carriers based on their gross receipts because it's federally not allowed. The comptroller is saying that the franchise tax isn't a gross receipts tax and it's therefore not preempted by the federal law and it should apply. So I think that this one is going to be around for a while and have a lot of consequences outside of the single taxpayer, just when you're pulling in that federal application. So, this is an item similar. I mentioned internet tax freedom. So whenever these federal laws just kind of cross over into our state laws, it's definitely something that's going to drag on a bit. It probably have larger implications. So the other one is an apportionment issue. So, is this in Texas? Is this not in Texas? So New Star Energy case. So New Star argued that the sales should be taxed where the ultimate destination of the fuel is, not where it's delivered. And so they believe that, the place of market approach that was previously held in a court case, it is, the place of the sale rather than the ultimate destination. The comptroller argued that its place of delivery in the state means, the sale is sourced to Texas because that's where it was delivered to the purchaser. And so it's just kind of a definitional, where is it delivered versus where is it ultimately used? And I think something here is just, do you always know the answer to that question or have that information available? And it just can really come down to semantics as well. How do you interpret if the property delivered to a buyer in the state, or is the property delivered in the state to a buyer? So, just a couple of things can have a larger impact, I think, on taxpayers over just kind of the one here in the case. So I know we had a couple special sessions here. I mentioned some of the items. Another one to maybe watch is the application of tax to Bitcoin. There was another one not on that list where it was considered an intangible for franchise tax purposes. So some thoughts of, how does that work for sales tax? Is it going to be tangible? Is it going to be intangible? So that's another one to kind of be thinking about. I mentioned, the data processing rules and the changes there, the changes with R&D. So just a lot of overlap in the sales tax and the franchise tax. And we, are there laws and their regulations and their rules are going to align? Are we going to have deviations where it creates, more confusion? So I don't think it's going to be business as usual. I think we're going to continue to see, a lot of court cases. I think we're going to continue to see, requests for more clarification through rules and regulations. So hopefully some of those agency changes on the front end that we talked about, of those being clear, concise, well organized, will be valuable to taxpayers. So anyways, those are some of the things that we're seeing and that we're watching. Again, I know that these might all be your specific industry, but I hope that you were able to kind of get to the underlying root concept that could apply to you, whether it's the bundle transactions, the resell, some of those items. So I don't know if we had, I think we have one question there, and we have just a few minutes. So Gina, do you want to address this? What does a typical engagement look like when you assist on an enterprise zone rebate project? So maybe just, companies may do these themselves. They are frequently partnered with a third party. So maybe just talk through what the engagement looks like and where you've typically helped out. Oh, maybe do that mute, unmute. It's not me. It's not just me. It's all of us. Not yet. Try it once more. No. Oh, we cannot hear her. I'll do my best, but I know on the front end, it's a big lift to request the designation. So there's a very large applications, pretty voluminous, a lot of items that have to be compiled and gathered. You can jump in if you think you are back on, but no, I don't think you are. So anyway, so on the front end, there's a heavy lift that generally we support with to get the application and get the designation. And then that compliance over the 5 years or so. Generally, there's a lot of, requests from, we talked about HR to confirm that those employees are still maintaining their roles, et cetera. So the annual compliance is also a piece that we generally have helped taxpayers with. Great. Well, I know we had a little bit of technical difficulty today. Apologize for that. We did some testing on the front end, so it just threw us for a loop today. Appreciate everyone joining us and sticking around. We have a couple of housekeeping items here at the end, and we will let you guys have a few minutes back after that.
And apologies for the technical difficulties. We will make sure that we look into that. But thank you, Gina and Kristen, for a great presentation today. If we didn't have time to answer your questions, we will do our best to follow up with you after the webcast. As a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts window. If you participated as an individual and met all certification requirements, your certificate is available to download now in the CPE progress window. I'll keep the webcast console open for a few minutes to give you time to download your CPE certificate. A copy of your CPE certificate will be emailed within 3 weeks, should you have any difficulty downloading it now. Here's a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey as your feedback is very important to us. Please also visit mossadams.com for future webcasts and other resources to help elevate your performance upward. Thank you for joining us, and we hope you'll join us again next time.